It's been a few months, but I'm finally doing another update on the Canadian housing market using information from April, May, and June 2020. From my previous video until now, everything was pretty much bang on to what I predicted. Isn't it weird that someone in the industry knew exactly what they were talking about? I knew in the short term we would be 100% fine. I was getting an insane amount of interest from first-time homebuyers, as well as people sitting on the sidelines waiting to snag a deal or try to take advantage of low interest rates. But now as we move towards Q3 of 2020, the picture changes. I'll start the video first by giving the facts of the housing market and our current economic situation, and then at the end I'll give my opinion on where I think we're going for the next few months, but I also have questions. Everyone wanting a huge crash, I have questions and I need answered at the very end. Please thumbs up the video and subscribe to the channel. I might finally trim my beard so I look like a normal human in the next video. I really wish there were more updates. There hasn't been many movements, there hasn't been big changes since my last video 3 months ago. I'm quickly going to reiterate the data sent out by the Canadian Real Estate Association. In April, the home price index was up 6.4% over the same period last year, but the national average sale price decreased 1.3% over the same period last year. It also had a massive 57% drop in sales. The drop in sales was obviously to be expected. In May, the national average selling price fell 2.6%, which was twice as much as April, but the home price index shows a 5.3% increase. What surprised me the most, in May, prices were up in Toronto, Halifax, London, Ottawa, and Vancouver, with some of those cities going up as much as 10%. Calgary and Edmonton, on the other hand, have been decreasing relatively quickly. Alberta, pre-lockdown, was experiencing a slow decrease in housing prices, but they've recently gotten a push off the cliff and the prices are decreasing more rapidly. I'll break down the stats in the cities I've mentioned, starting with the positive. Montreal, the price of a single family home increased by 9% year over year for May. The price of condos increased by 11%, which is just insane. In London, Ontario, increased by 7.4%. I'm getting a lot of interest from investors about purchasing in London, so this wasn't a surprise to me. Halifax, prices are up 9.3%. Toronto and Vancouver were similar, each having sale price increases of 3% compared to May 2019. Now on to the negative. Calgary and Edmonton. Calgary decreased by 7.3% compared to May 2019, while Edmonton dropped 4.04% for the same time period. These trends will continue into June. With the new mortgage rules coming in on July 1st, there's been an added push for buyers to get their purchase in, assuming they were already in the market. Just spewing out facts is somewhat deceiving. I think it's wrong to say that the housing market has recovered or it hasn't been affected. I don't think it has been long enough for changes to fully take effect. Current unemployment is at 13.7% average in Canada, with the highest being in Alberta at 15.5% and Manitoba being the lowest at 11.2%, but I don't think it stops here. If restaurants are supposed to operate at 50% capacity, I can guarantee their profit margin isn't enough to support 100% wages, 100% rent, but only 50% of their customers. We might see more layoffs and higher unemployment as we move towards the end of the year. That will affect housing prices if it happens. Also, with CERB ending, there's no telling if the government will extend the payments or if they'll provide any additional payments. But that's more loss of income, more potential foreclosures as people's savings run out, and another housing hit. Mortgage deferrals, assuming no more extensions, will probably end in October, November. And again, as people's savings run out, if they haven't found another job, there might be more foreclosures, another housing hit. Canada has had an immigration-fueled growth strategy to their economy, and this is obviously going to take a hit. The question is by how much? But countering this thought, a small study shows that 35% of respondents are more interested in coming to Canada post-illness because they believe Canada will be better off than their own country. So it's not to say that things won't be bad, but they're saying it will be way worse in their own country than in Canada, which is why they want to come here, which I understand. Now that I've spewed a bunch of facts, reread some articles, I'm going to be very annoying here because I'm not sure how I feel about the housing market going forward. Everything is in such flux, I'm not sure where our prices will be in a few months. My thinking goes like this. If the economy opens back up, if CERB gets extended or mortgage deferrals get extended for anyone in need, immigration starts again, I think the Canadian housing market, except for Alberta unfortunately, will be fine for the next few months and will experience flat prices, if not slight increases. Then on the other hand, I start thinking we'll have more job losses, 13% will turn to 20%, CERB will end, mortgage deferrals will end, people's savings will run out, and then we'll have a massive amount of foreclosures, people losing their homes, housing market tanks. To be honest, I don't want that to happen. I don't want 3 million Canadians to lose their homes. If that does happen, Canada will have much bigger issues than just current renters trying to snag a deal on a house. Here's where I turn the video back to the people who want a housing crash, people who have been waiting on the sidelines to buy a house. CMHC has released an outlook on their prices. I mean, I know they're part of the government, but they've always been reactionary to their approach, never proactive. Their measures always seem out of touch and never do what they're actually supposed to do, aka the stress test. I can do a whole other video on the failures of the stress test. Regardless, CMHC's Outlook expects prices to decline 9 to 18% by mid-2021, when they expect everything to slowly recover. Okay, 9 to 18%. It might be bad for some, but to be honest, in the grand scheme of things, that's not terribly bad. Most people have had a 10% deposit on their house, and assuming you didn't purchase just like in February, you'll still have a lot of equity in your house, so you won't be completely underwater. So this is for people who have been asking for and waiting for a crash. If prices go down 10%, would you buy? How would you know when prices have reached the bottom? You've been waiting this long, would you actually pull the trigger? I had a colleague who sold her house in 2010 because she thought houses were too expensive. Her plan was to rebuy the same house or the same neighborhood at a steep discount when prices crashed. I had another colleague in 2014. She sold her condo. She thought everything was too expensive. She wanted prices to crash so she could buy a house. Many comments on the previous video I made went something like, someone paid over market value for this house on my street. It's too expensive. It's not worth that much. I don't think people understand what market value is. Market value is what someone is willing to pay on the free market. So if someone paid $800,000 for a townhouse that was open to the public and listed on MLS, that's the market value. Just because you think it's too expensive, it doesn't affect the market value. It just means you don't see the value or you can't afford it, which is fine. But it's the same as someone who doesn't see the value in a $700,000 Rolls Royce. Like it or not, that's the market value. And again, like it or not, people pay that price. Everyone is waiting on the sidelines for a crash. Okay, fine. But if it crashed 10%, would you actually purchase? Or would you think, it's gone down 10%, I think it'll go lower. I think it'll go another 10%. I'm pretty sure you'll be waiting so long for an even bigger crash that prices will start to come back up and you'll have missed the boat yet again. We're in 2020, prices suck, we see a lot of speculative purchases, I get it. But if prices went down 10%, aren't you just paying 2019 prices? Everyone thought 2019 was too expensive. Last year you said prices are too high, and now you're buying at these too high prices? So what if it went down CMHC's quoted 18%? Now you're buying at 2018 prices. 2 years ago, I know you were saying prices were too expensive, and now you're excited to buy at these too expensive prices. So I don't get it. Everyone's sitting on the sidelines. If prices actually went down, would you actually purchase or would you be too afraid? Another point, if you've been investing in the stock market, waiting for houses to crash, you want to sell your investments to buy a house, have your stocks recovered enough? Do you still have your down payment? Are you mentally ready and able to pull your liquid investments out and put it in an illiquid investment? Everyone's been waiting for like 13 years to buy a house, but if that golden opportunity came, would you know it? You'd only know a golden opportunity after it has come and gone. And for anyone who wants a 50% decrease in prices, you're just not paying attention. I'm hoping I can get some good banter and responses from everyone. Thanks for watching another housing market update. I'll be spending the next few weeks posting videos more focused on real estate, ranging from first-time home buyers to first-time sellers and everything in between, before jumping back into stocks and investing. Thanks, guys.